Hey everyone, hopefully you're having a good day. My name's Andy. My channel is Finding Value. Today we're going to go through Twitter, see what people are sharing on social media. I'm going to interject my financial opinions as we go. And it's going to be related to basically three topics: wealth building, commodities, and or financial topics. Because that's what I like to cover. Let's dive in. Let's see what's going on in the Twitter world. You can follow me at finding_finance, and you can join our community, finding-value.com, where I go over individual companies and help whatever questions you guys have with the markets. So coming on down, URA, it says, when not using log scale, the URA chart looks absurd. So much more room to run. That's what URA looks like, guys. This thing's still coming. So this is stage 4 decline, stage 1 base, and we're just entering stage 2, which is a move to the upside in stage analysis. We're just getting started, guys. Calm down. Now, I know some people are like, well, this is where the sentiment is getting too overdone. All right, I pulled up NVIDIA. This is the sentiment getting too overdone. This here is your consolidation, your base, so to speak, and then your breakout and your running. And at some point, this will peak and then work its way on lower. That's kind of my opinion there. Now, this could keep running. We don't know. Maybe it keeps running. I don't like the valuations it's at. I'll say that. But here's a couple of things. If you purchased it in 1999 at 37 cents, 50 cents, 30 cents, all in that area there, and you held it the entire time, you'd be at $600, roughly speaking. Well, that's 3 times 600. That's well over 1,000 bagger, guys. 1,801 bagger. Pretty much that there. The key that I have learned over all these years, here's the key, guys, is to hold through thick and thin. If you know the company and it's a good company, to hold through thick and thin, and you just keep holding, even though you had to go through monster pullbacks every few years. Now, what people are going to do is they let price drive narrative. They say, oh, you're the smartest person in the world. Oh, you're so dumb for not selling. Oh, you're so smart for holding it. Oh, you're so dumb for not selling it. That's what everybody's opinions are as you ride through it. What I see is a chart that did this. Everyone else sees these little bumpy movements in the price. I'm not saying that I'm going to go buy Nvidia. What I'm saying is, if you look at some of these commodity sectors, the deficits are so blown out in favor of the commodity price to go up. If you take a longer term view than just looking at it from days and weeks, and you start looking at it from 3, 4, 5, 10-year time horizons, I think things look so much better and are much clearer. You're still going to have to ride through the emotional ups and downs in the short term, but to get the really big returns, you have to look at this from a big picture view. And I don't think, someone might have made 100% back here, sold out, and then left this on the table. That's only if you knew the company. I didn't know NVIDIA back in the 90s, but that's only if you knew it. So I would take that approach of the big picture view of URA. We've got a long way to run. Japan says you can't have our uranium. He says most Japanese nuclear utilities have grown more reluctant to sell their substantial nuclear fuel inventories into the market, removing a huge chunk of previously available material and complicating a possible solution to any nuclear fuel supply disruption. As Japanese reactor restarts gain momentum and geopolitical instability and declining supply in the fuel market continues to push nuclear fuel prices up, operators with imminent reactor restarts might still sell small quantities, but most Japanese utilities will hold onto their inventories. Where is this supply going to get shaken loose from? It's not coming from Japan, and we're getting all these other restarts that need fuel probably sooner than later. This is gonna end up being a little bit of a squeezy, isn't it? The energy demand for AI is going to blow people's minds. Nuclear uranium energy SMR says Altman seeks to raise billions for network of AI chip factories. AI and the energy it will consume is going to blow people's minds. I completely agree. Where is it going to come from? We're going to get some wind out there, generated only when the wind is blowing and the sun is shining for solar. I think we need to throw in some uranium, some nuclear here, guys. We need to start building out big time. I like this chart that Hinster put up here. So what he's got, just to briefly talk about this, generally you've got support levels where the price hits it and it's used as support. Then you've got resistance levels. Resistance levels are levels that you hit underneath that you are trying to break through. We broke through that resistance level and we might come back and do a retest of the resistance level, which is now support. That is very possible. But I think I wouldn't get too caught up on that. What I would get caught up on is I think we're going to go higher and maybe cost average in slowly if you haven't purchased your shares for this is URNM, just let you know, the Sprott uranium miners. I guess I'm going to have to, there you go, Sprott uranium miners up there. So what he did is he took this channel and projected it up above on this channel, and it has a potential move to $77 from 56 bucks. That's what he's thinking. But I think we're going higher. That's what I think. We're going higher. I don't know where we'll peak out at. I'm not going to pretend like I know the exact movements, but yeah, I think we're going higher. Ronnie, it says, do you expect a recession in the US in 2024? Based on the respondents at our Goldman Sachs Global Strategy Conference, I don't know what GS is, London, January 2023 and January 2024, it looks like more people says, do you expect a recession in 2024? No, is 2024. A lot of people thought recession in 2023, but now it's scattered to no. Are they going to be right? I don't know. We'll see. Bad news for oil stocks, buy NVIDIA. Obviously, he's joking here. He says, we're drawing down, well, Kim says, we're drawing inventories globally. You can see the decline here, and we're all the way down at this little corner over here. Very low levels of inventory. Last time we were at levels of this inventory, we were in the 90s. What's going on here? Why are we still in the 70s with inventories down here at other levels where we were close, more closer to the 90s? Undervalued is what I think oil is in terms of pricing. Steve says, one metric used to see how well the housing market is doing is the number of days it takes to sell a home, known as days on the market. Here are the numbers for the last 7 years. Here's a few points. Notice the seasonality throughout each year. The black vertical columns represent each December, and current numbers are better than pre-pandemic numbers. So days on the market, remember, days on the market, how long it takes to sell a house. This is the median days on the market. 2017, 18, 19, it really started to decline in 2020 and 2021. We have like a double bottom kind of. We've come on up a little bit towards more the average of 17, 18, 19, and 2022. And then we are below average still for days on the market. I hate to say this, guys, but this is a market that looks exceptionally strong, not weak. And I understand that we've come up in days on the market from the bottom, but we're still below 17, 18, 19, which were very strong years for the housing market. So what data are people looking at for the entire United States, not city to city, that is making it look so bad? Like we're going to have some great financial crisis and a housing recession. Like a big recession from housing, I should say. I don't see it. Inventory numbers are low. Days on the market are low. Everything still looks good. We'd have to see a reversal in all of this for me to change my mind. Look at this. In my entire career, I've never seen this before. Oil gapped higher at open, and then every single time it gets sold down throughout the day. This has been going on for a few weeks. I've talked with traders and they've noticed this with no one being able to explain why. So we gap up in the morning, we move on up, and then it gets sold off. Move up, sold off. Move up, sold off. What's with all this selling pressure here, guys? Like, who's doing this? How are they doing it? What is going on? Are they just like flooding the futures market with a bunch of oil contracts in the middle of the day to keep the price low? Like, what's going on? The last time global inventories were this low, WTI oil was over $90 a barrel. Yep, I agree. I agree. Moving on down, uranium. Remember, European Union natural gas did almost 100x in 2 years from 4 megawatt hours in 2020 to 350 megawatt hours in 2022. And what he's doing is he's saying, natural gas, EU Dutch basically did almost a 100 bagger. And people don't think that this can come to uranium. Why? Why couldn't uranium do almost a 100 bagger? And my answer is it probably might. I mean, guys, we've been seeing these things go vertical all around us, and we're not taking mental notes of it. And when you apply it to the thing that you're invested in, they're like, oh, there's no way it can do that. Well, it's done it in all other commodities and areas around us. Why couldn't it do it to uranium? I'm saying that it's very much a possibility. 61% of Americans are living paycheck to paycheck. Is this a spending problem or an income problem? I would say it's probably more on the spending side. I know a lot of people who make good money, and I know people who don't make a lot good money, and it's generally a spending problem for whether it's not income related. It is a spending problem almost on a lot of the accounts, and I think it's an income problem only if you're cutting out things that are marginal. So what generally people do that the big problem is they go buy everything on credit. You've got all this interest working against you, and that is a spending problem, not an income problem, because you're setting up your entire life where all of these the interest rates are all working against you, not for you. And there's a lot of things that you can do from the spending side to increase your savings and investments where the interest rate is working for you, not against you in terms of investing. Ongoing conflicts in the Red Sea continue to escalate as investors come into the new year with a widely held consensus that inflation will decelerate. What could go wrong? Now, this is kind of crazy here, guys. Look, this is the inflation expectations, the net percent expecting higher global CPI. We're at minus like 80. This bottomed in 2009. So 2009, it bottomed and came back up, and I bet you this is bottoming here, and we're going to come back up. Whenever things get pushed to one side of the boat or the sentiment gets pushed to the negative side, generally it's higher likelihood that it will swing. So inflation sensitive assets right now have all been sold off, and they're probably the best time to enter is about now based off sentiment. And then what you're going to see is you'll see a break to the upside, sentiment will change, price drives narrative, the market psychology all will flip, everyone will flip, and they'll be like, oh man, oil's gone up 50%. I should buy it now. And I'm like, why didn't you buy it 50% ago? Like, it's best to buy it down here and sell it when it's all the way up at the top. You don't want to buy it when it's at the top and sell it when it's down here. And notice that we were kind of in a downtrend here. We kind of popped up from that stimulus money, and then I think we're actually putting in a true bottom here, which means that maybe the commodity bull market is actually going to come. It's not a stimulus-driven little explosion that we had in money printing. I think the real commodity bull market's like right now coming in front of us. Like we're getting close. I think it's going to start in 2024. That's my guess. When exactly, I don't know. But I'm hoping 2024 will be a nice big push off for the commodities across the board. The year over year delta in U.S. commercial crude storage could become more apparent, should become more apparent as we go through January and February. Here's our preliminary projections for U.S. crude storage. We're at pretty low levels, and we're right above 2022. 2022 is right below here. So yeah, we're coming up a little bit, but I'm not convinced that we've got some huge surplus coming in oil. I'm going to hold my judgment. I'm a bull on oil right now because I think the sentiment is blown out. And I'm going to hold my judgment because the drilled uncompleted wells are real low. I think things are going to slow down from a production standpoint. So I'm going to hold my judgment. I think this could come down and demand be pretty resilient this year. We've got power burn for natural gas. You can see it's up quite a bit in 2024 compared to other previous years. So we're starting the year pretty strong for power burn in terms of natural gas demand. And it's going on up. You can see 2022 was lower than 2023, and then 2024 is way up there. So hopefully that will continue, which I think it will. And that's where I am going to end it, guys. So that's what I've got for today. Give me a thumb up for the content. Subscribe to the channel. We are doing a question and answer session right now. If you want to jump on the call, you better sign up and ask me whatever questions you've got about individual companies, sectors, whatever it is. But that's going on right now. It's going to be at 7 a.m. Mountain Standard Time, Saturday, which is today. So if you want to jump on the call, you're welcome to do that. Ask me whatever you want. And we'll catch you guys next time. This is Finding Value.